Could you maybe explain what these different market segments are and the conversations that are going on in each of them?
Yeah, I think there is a core impact investing group. I think that's been occupied primarily by foundations and by high net worth and ultra high net worth investors. And I think that the watchword there has been, my money should do more than earn returns. It should do more. And I think we're watching a whole different set of investors, typically pension plans, sovereign wealth funds, to some extent endowments, where they're looking at sustainability and they're looking at global demographics, and they're asking the question, what are the risks if I don't pay attention to these trends, and what are the opportunity sets? So a specific example there are pension plans that are starting to ask the question, if we move to a low carbon economy, if in fact climate change starts to take place or is taking place, what assets do I have that are exposed to downside risk? And then the second half of that, which is what assets should I be in if I believe these trends are basically macro trends? And so the wording there is about risk and opportunity. The wording here is can I leverage my assets to do more than just returns? And that's a very different base to go off of the conversation. And then the third area that we see is predominantly the conversation that's taking place with corporations. And we think that we're seeing the second coming of the word responsibility. Whereas over the last decade, the corporate social responsibility was much more of a brand positioning, marketing, PR, and it's now transitioning to how do I participate within a low carbon economy? How do I make sure that I don't have a stranded asset or a stranded corporate strategy? How do I make sure that I'm not the last manufacturer of a buggy whip? And that in fact I can participate in that. A case example of that is what General Motors has done with the Bolt, not the Volt, and there General Motors has remade itself. It's the heart of almost every car company is the engine. It's sort of where the pride and joy comes from. And you look at General Motors having taken apart their engine labs and replaced it with a electric propulsion lab and electric storage lab. I don't know the analogy to use, but that's about as far away as you can get from what you think of as your heart and soul of the company, is that G8. And so now we have the Chevy Bolt that is going to challenge, I think, all of the metrics of the Tesla. And I think that says more about where we are in terms of responsibility, CSR, sustainability than anything.
Sure. So it sounds like what you're saying is that, these three different market segments have very different underlying motivations.
Yes.
As to why they're interested in sustainability. Do you think that's an issue? Do you think it's important that these three different segments move closer together in order to strengthen the field as a whole?
Yeah, I think that there's a market for very, very expensive basketball sneakers, and there's a market for Ted's shoes, and there's a market for Converse, right? And are they all sneakers? Yeah. And should we unify them into the grand high-end sort of cloth, sort of? I think for the time being, it's important to realize that there are market segments that are appearing, and that there are now service providers, investment providers like ourselves that are making very conscientious choices about who we are going to serve. I think that over time, these motivations may blend together, the motivations may blur, but for the foreseeable future, the next 2 to 3 years, I actually think that there's value in keeping those market segmentations separate until those market segments no longer want to be kept separate.